It's the Christmas season, and Adam from Walker Mortgage just joins us today to talk about, well, lots of things. We got a lot of stuff on the plate today. First of all, Bud, happy holidays. You and your family. I hope you have a great one.
Yeah,
And
it's exciting. We got the Christmas lights up and everything's ready to go. And
you're ready. I'm not. I'm looking to use December.
I've been accused of going a little overboard with my Christmas lights from time to time, but they look good.
Have you? Well, yeah. Hey, if you look good, don't worry about it.
That's right.
Um,
That's right.
since it's a December show, I'm asking you to look into your crystal ball here and give us a few ideas what we should expect in 2024, if you don't mind. I know I don't want to put you on the spot, but
Yeah.
I'm reading a lot of the economists are saying it's going to come down, could be as low as 3.5 by the end of the year of 2024. What's your thoughts on all that?
Yeah, we're seeing a lot of different reports, and this could go almost anyway, right? And we've what's old, it's new again. And if we look back, if you look at the past, kind of can predict the future a little bit. But I remember going back as far as 2008 when I was just getting started in this business, and mortgage rates had dropped. We were in the ones and twos at that point in time, and then they came back up over the fours. And everybody said we'll never ever see in our lifetime again another rate that low. And that was the spring of 2008, 2009. And by that fall, the rates were back down. Right. So there is so many different predictions out there and so many different economies. I think the only thing for certain is housing values are going to maintain. We are always going to have a supply and demand issue. That is the number one thing that we're going to see. There's a lot of predictions that we're not going to drop rates. We're not going to see any big significant cuts. On the overnight rate until we hit the inflation target of 2%. And then there's predictions that we might have some rate cuts before that. In November we've seen some fixed rates drop. Anything is possible. I would say anything's almost on the table. I would say the only thing that I can say for certain is we're going to see housing values maintain.
Is there any? I mean, you mentioned inflation in there. Is that an indicator that you watch to see where the mortgage
Yeah.
rates can go?
So there's two big rates that we really deal with, right? We deal with the variable rates and the fixed rates. So inflation, the Bank of Canada, you see, Government Tiff Macklem, he'll stand up and he'll kind of talk about the overnight rate and what inflation is at, how we can maintain and how we can kind of control the housing market with the Bank of Canada overnight rate. And that's what the banks borrow from the government from. That's how they set their rates, is by that overnight and variable rate. And that affects, if you have a variable rate mortgage, that overnight rate is what's going to affect that. So as that rate continues to climb, and we've seen, back in early, through COVID, where that rate completely dropped, and people were getting 1-2% interest rates on their variable, those continued to rise throughout the past couple of years, right? And now those people, unfortunately, you're paying 6 and 7% on those variable rate mortgages. That's one side. The other side is the bond yields, right? So the bond yields are what controls the fixed rate mortgages. So as bond yields continue to go up and down, the fixed rate mortgages are affected by those.
Okay,
So two kind
great.
of
That's great
indicators we kind
information.
of keep an eye on to see where rates are going, right? And again, I'd love to say we could predict what are we going to see in the spring. I could give you 10 different economists that I really, really trust, and they could tell you 10 different things.
Wow.
Yeah.
And I agree with you. I mean, you don't want to, you got to be careful. You got to watch all the proper indicators to make sure you understand where the rates are going to be. And a lot of people next year, their mortgage will be maturing. So they're going to have to make a move again, right? With all this cluster of folks coming through, the rates were down and now they've climbed and hopefully they'll recess a bit. My next question, Christmas spending, man, folks get a little carried away, don't they? Any advice there?
Yeah, we've all been accused of that. That the worst piece of mail ever to open is the Visa statement in January, right? You hear that all the time. It's never one you want to see. It's kind of like stepping on a scale. Somehow, you don't want to do that either, right? So, the scale in the Visa bill in January, never a pretty thing. If spending's gotten away from you, we've done the $25,000 challenge for the last couple months. We've had some great success with that one. If that spending has gotten away, you've got equity in your home, take advantage of it, right? Use the equity in your property, stop paying high interest on those credit card bills. There's some really, really great opportunities there. And a lot of times right now, there's a huge number of mortgages coming up for renewal, right? Over 20% of mortgages, so a fifth of Canadians, are coming up for renewal in the next 12 months. Right. So if this is your time where your mortgage is coming up for renewal, what a great time to sit down, reassess your financial situation, look exactly where you're at, right? we've talked about it on previous shows. I've talked about it a lot on my other podcast, the Mortgage Strategy Show. I worked for the bank for 17 years. If you're getting that mortgage renewal in and it's refinance time, sometimes at the bank we had the best rate. Sometimes at the bank we had the worst rate. Most of the time we were somewhere in between, right? So if you're getting a renewal notice, different things like that, if you're getting that renewal notice in the mail, they know a certain percentage of people are just going to check the box and be done with it. Don't check the box. You're getting an average rate. You're costing yourself money, right? So in January, we have that time to kind of reassess, see exactly where you're at. What a great opportunity to sit down and see how we can save you some money and save that cash flow.
It's interesting you said that. We're so conditioned, just to check the box and go along. It's thousands of dollars we're throwing away.
So much money. And sometimes, like I said, it's just the easy option. People don't know. Maybe I don't qualify for that next mortgage. Maybe and if I just check the box, I'm done. I don't have to worry about anything else after that. And they know, the bank, those rates are always going to be higher. You are never going to, the bank's never going to call you. The banks are some of the biggest businesses in Canada. They know how to make money, right? They're not just going to send you the best rate, the best possible option through the mail. It's not coming. Right? Sit down and review it. Like thousands of dollars are being left on the table, and they've got all the tools. They know exactly how many percentage of those people are just going to sign the box, be done with it, and they're good to go. Right? Don't sign it. Meet with a professional, that has access to all the lenders. Right? When I was at the bank, if we had an average rate or we had the worst rate, we had to sell that. That's how our employer, like the bank's our employer. We have to sell what's on the shelf. Now that I'm on this side, we can sell anything. Right? We can go to the difference. And I do, every mortgage agent has their favorite lenders that they work with most of the time. If they're not the best rate, we're not tied to it. That's not my employer. We're here for profit for clients. We don't care about shareholders here.
I think that's the big piece that I've learned from you in the last little bit is, I'm here for you. I'm not here for the bank. I'm, what's best for you as far as a long-term commitment into your mortgage. Do you see, when you mentioned that too, there was so many other questions that I got when you sort of trigger those. A lot of times when you have a mortgage, you're paying this incredible amount of insurance as well through the bank. Is there any alleviation when they go through you? Is it still the same thing? Or do all banks and lending agencies have to charge you that?
Yeah, so there's a couple different types of insurance. Your life and your disability, your critical illness, which I think are incredible products. I think they're so important to have. And when I was my younger self, didn't even discuss it at all. Now that I've been in this business and I've seen the other side of it, having protection is the most important part of having a mortgage. Right? It's so important, and I hear all the time, I've got protection at work, or I've got this at work, and a lot of different things. There's so many different options, and what the banks have is what's called creditor insurance, and it's going to protect your debt. And so if something happens to you, the debt's protected, and you're going to pay the same premium through the entire lifetime of the mortgage, and that benefit is going to decline. The advantage we have is, we work with Sun Life, and they can sell you a whole life policy. They can sell you a term life policy, and the benefit is going to be the same, right? So if you take out a $500,000 policy on a $500,000 mortgage today, that's going to be the same for the life of the mortgage. So even if your balance has been paid down in a few years, your balance is cut in half. Let's say you're halfway through your mortgage, you have $250,000 mortgage left. We're going to still give you the benefit of $500,000. You're not getting the declining balance. So there's a lot of different options that are out there. And I'll say, like, when I was at the bank for a lot of times, we discussed these, and these were the best products that we thought was available. Now that I'm on this side, I've partnered with an expert, right, that specializes in life insurance, specializes in critical illness and disability protection. And we make sure that your mortgage is protected. And it's really your lifestyle, right? It's not just your mortgage. It's your lifestyle. What happens if something happens to you? Do you want to see your kids just have to move houses and they have to, yes, the house is worth a lot more than the mortgages. Is that what you want for your kids, right? Do you want them to have to move? They've already gone through a traumatic experience. Make sure it's protected, right? And take advantage of that protection.
I didn't know that. That's critical information too. I didn't know Sun Life did that, because that really alters the way you're thinking about it again, right? Because this is another area that you're never really educated on as a consumer.
And it's so important to review it, right? And one of the things, I'll tell you a quick story. I had a good friend of mine, worked out, we had the conversation about, protecting your mortgage and having it's called disability protection. I like to call it if the doctor says you can't go to work. Because when I think of disability, I think of a wheelchair or crutches or something along those lines. But there's so many more disabilities. There's so many more reasons you don't have to go to work. Mental challenges, cancer, all those different things. When I say disability, a lot of people don't think of those things, right? But that's going to affect a lot of people. And a friend of mine says, "Don't worry, I'm at OPG. I've got the best plan ever. My benefits are the best that there are." And in a lot of cases they are, right? If you think of a lot of government employees, they are the best. But we looked at it. Is your disability, is that on your base salary or your overtime, right? Some of those people that work at different factories like that, they get a lot of overtime, right? And in this scenario, his overtime made up almost double what his actual income was. So I said, okay, does your disability, what does it cover? Your $150,000 overtime or your $60,000 base salary? I want you to look into that. So we looked into it. It covers the base salary. I said, well, do you pay for that, or does your employer pay for that? Well, I don't have to pay for it. The best benefits ever. I don't pay for it. Well, if you don't pay for it, guess what? It's now taxable, right? And the 100% disability that you thought you had, not even allowed, right? You're down about 60, 70% of your income, right? So now we're looking at, instead of that $150,000 income, we're looking at the $60,000 base salary. Now we're cutting that in half. Now it's taxable. Now we're cutting that in half. I think by the time we looked at it, of his $150,000 salary that he gets, if the doctor said he can't go to work, he was going to be bringing in about $27,000, $25,000, $30,000 in that range, right? So, and again, this is a conversation that we have when we're talking to insurance experts. Meet with an expert, review it, right? The last thing you want to do is think that, hey, I've got the best protection ever. If you're bringing in $150,000, all of a sudden that's down to $25,000. How's the mortgage payment getting made? How's the groceries getting paid for? Right? Like, that's affecting your family's lifestyle. And if you're having in a situation where you have to get disability protection, things aren't good. You don't want to add extra stress, right? Like, if you've got to go through cancer treatments or whatever, is that an extra stress that you want on you? Meet with the experts, review it, and make sure that you're taken care of.
Wow. Yeah, thanks. That's great insight. You mentioned the challenge. How's it going?
Good. You know what? We're meeting with clients all the time, the $25,000 challenge, where we're reviewing, taking advantage of equity in your property. I can't stress enough. It's a free 360 review of your debts. Sometimes we're finding savings by not even touching your mortgage. There's a lot of other things that are out there. We review some of your bank statements, go over your spending, see exactly where we can save you some money. And there's so many opportunities. And every time people are leaving there and the stress is gone, right? When we're saving that money, and a lot of people are going to be going through it in the next few months where, the visa bill, like I said, it's gone up. Take some time. Let's sit down. Let's review. Let's see if you've got equity in your property that's doing nothing for you and how we can help save you some money.
Great info today. I know like you said, you've got to get out there and make sure you get Kim a beautiful gift this Christmas. Okay. Maybe you might have to spend a bit more. I'm just saying. Yeah. But you and yours have a safe and happy holidays. Okay.
Yes, absolutely. Merry Christmas to yourself. Happy holidays. I wish all the best, and all the listeners, I hope you have a great, safe holiday season.
Great, bud. And we'll talk to you in January.
Can't wait.